Hello, this is the Finance 331, Financial Management. We start with the Chapter 1, Introduction to Financial Management. We will not cover all materials from this chapter. We only will look at the first part of the chapter, which is area of finance. So there are four basic areas of finance. Number one, corporate finance. Number two, investment. Number three, financial institutions. Number four, international finance. Now let's look at one by one. So what is the corporate finance? The corporate finance handles the basic financial ideas and principles applicable across all the various areas of finance and beyond. This is the main subject of this course. It's mostly cover the financial issue in a corporation. There are three areas of the corporate finance. The first one is the capital budgeting. And second is the capital structure. The third one is the working capital management. So capital budgeting covers the long-term investment decisions. So when we run a business, we should make an investment decision. And if this investment decision, usually long-term, right? So long-term decision, then that's the capital budgeting decision, whether this investment is profitable or not. So to invest, we need money. We need money to fund this investment. This issue is about capital structure. The capital structure is whether we finance this investment through debt financing or equity financing. Now, third part is working capital management. Working capital is daily operational cash flows, so such as the inventory, account receivable, account payable, wage payable, and so on. That's working capital management. Now, next issue is the investment. So investment asks these three questions. The first, what determines the price of financial asset? It's about the value of the asset. It's called the valuation. Second question is, what are the potential risks and reward with associated with investing in financial assets? It's about risk-return trade-off. The third question is, what is the best mixture of financial assets to hold? That's portfolio management. So it worked with the financial assets such as stocks and bonds, so sometimes derivative securities, and try to find the value of the financial asset, try to find the relation between the risk and returns, and how to allocate your assets. That's called the investment. Third part is the financial institutions. This is also called the banking or financial intermediaries. It basically cover the companies that specialize in financial matters. Because financial companies are so different to the manufacturing firms or other service firms, we have to pick this one as sole topic to study on that. So this company includes banks, commercial or investment, credit unions, savings and loans, insurance companies, stock brokerage firms, and many other financial intermediaries. Fourth issue is called international finance. So international finance cover all the three areas, previous three areas, internationally. So it may allow you to work in other countries or at least travel on a regular basis. So sometimes the company can invest directly to other country, foreign country, or they have to sell something there, so they need to go to travel. You need to be familiar with exchange rate and political risk. Exchange rate means because the foreign country usually do not use the US dollars, right? So there's some risk about exchange rate changes. They also have a different political situation. Sometimes political matters are so important. You need to understand the customs of other countries, usually called the culture, right? So culture matters actually. And also, speaking a foreign language fluently is also very, very helpful. Okay? So it's called international finance. So again, there are 4 areas of finance. There will be pop-up quiz. Now, what is the goal of the financial management? That's the final question we're gonna ask in this chapter. What should be the goal of the corporation? First of all, what is the corporation? So corporation is the company that has many owners, the number of owners who hold stocks. So stockholders. So stockholders own this corporation. So what should be the goal? Some people say, oh, what about maximizing profit? I mean, what type of profit are we talking about? What about minimizing costs? Why? Why do you have to minimize costs? Or maximizing the market shares? Again, why? The major goal we can think of is basically we need to work for the owner of the company who have full responsibility of the firm when especially company go bad. So when company go bankrupt, who's gonna get full responsibility? The owners will get the full responsibility, and these owners are called the shareholders or equity holders. It means that we need to maximize their wealth, the owner's wealth. How to maximize the owner's wealth? The wealth of the owners, the equity owners, are represented by the stock price in the market if the firm is listed in public stock market. Which means now we try to work for maximizing stock price. So maximizing shareholders' wealth is the goal of financial management, and it's actually same as the maximizing the market value of the existing owner's equity. So this is end of the chapter 1, and we'll move on to the next chapter.